Hello, Anubhav.
Hi, how are you, Puru?
I'm all right. I'm all right. Busy day today. How was your weekend?
Awesome, thank you.
All right. Good evening, everyone who has joined us live or will be joining us live or watching this later on in a recording session to our Monday evening Q&A session. So this time again, we decided that we should talk a little bit about some elements which we are seeing coming through to us when we are discussing with a lot of our clients. And the topic is really about opportunity cost and what you are losing by not investing in property. This comes in conversation all the time when I'm talking to clients, to a lot of B2B partners like accountants, brokers, even builders sometimes. So, Anubhav, over to you.
Right, thank you, Puru. Look, I guess opportunity cost, what we mean by that is a lot of people are in inaction at this stage to see, wait for the right things to happen to them, or maybe the right market, or the right opportunity, or the right time to invest, which means that there are not only months, but maybe years that pass by, and people haven't taken any action. And it could also be a result of procrastinating into doing something, maybe not today, but tomorrow, and that tomorrow never comes. And that costs real money, because that actually means that someone who could buy a property maybe 3 years ago, 4 years ago for 350, 400, $500,000 is now buying that 30, 40, 50, even 60% more than what they could have achieved earlier. So that's the topic today, that I want to talk a little bit more about what causes that to happen, and essentially, what are the different people who are affected by this that we are seeing, where the opportunity cost is large for them to do so.
Excellent, excellent. And there are and you picked up some good themes as you explain what the theme should look like for this conversation. It's not just the fact on what you are missing out. It's also the time elapsed, the life's position, which could have been a bit different, and also the markets and the competition in which you are entering. So, knowingly or unknowingly, um, people sometimes don't know that every single day which is passing by, given that their personal circumstances allow them to take a decision. And it's also comparative cost as well with any other asset class. So let's straight dive into the whole gamut of things, and let's start with the opportunity cost of taking a decision earlier, which impacts their ability to secure a property in a decent market. Let's look at that one first.
Sorry, what was the last one? Looking at the opportunity where they have not been able to secure a
So if
property.
they could have bought the same property for
Yeah.
400,000, probably they are going to pay 500,000 now.
Yeah. Look, that is, there are many causes of that, for that to happen. Like, for example, we have people who want to first learn a lot about the market, they want to understand how things work, and they want to learn all about it. They want to understand the strategies, they want to gain the confidence, they want to research on their own, they want to find their own right data for them to be able to invest. And that's what then they're quite comfortable to go in there and then do the job, right? Now, what that actually means is that that can take significant amount of months for them to research before they are even confident to do that on their own.
Yep.
Another case we have seen is a lot of people are actually looking to do this DIY on the back of actually, getting educated through some online courses that they are enrolled in, which is great. And I think knowledge is important, but opportunity cost is also real. Now, we've had a client recently who has bought two properties with us back to back a couple of years ago. And then they recently secured a third property. But in between buying the second and third, there was almost 12 months. They haven't done anything from buying the property perspective. Yet they took the action to go and learn, on their own, get into an online course, so that they could save some money on buyer's agent, which is great. And I think it's important. Education is important. And after completing that course, they thought they could buy the property, but they weren't successful to do that. And that's because lack of confidence and at the same time lack of enough time to be able to go and find their own properties was definitely challenging. So they came back to us to buy the third property, and within 2 months it's done. Now the property that they bought right now in mid $500,000 we could have achieved that for them, in early 500,000 or late $400,000, which means that there was almost $85,000 in opportunity cost for them had they taken the action 12 months ago. So that is very real, right? As a result, so there are plenty of people who are in their journey right now, who are canvassing markets, learning things on their own, and then who have never bought properties even before or don't have a portfolio, and trying this on their own, which is good. But then, of course, there's not only cost of waiting, but at the same time, it could be a costly affair for someone who's trying this, with a very limited knowledge and experience and exposure to how property works in Australia.
True. So lack of confidence, lack of experience of buying into a market which is new to them, lack of tools as well sometimes, and also the relationships on the ground, I guess, because in due diligence, that's very important. Even if you ask for information and the information comes through, the the feeling of trusting it or not trusting it is sometimes really putting inertia in people's ability to take a decision. And if it's a hot market, we know there are 8 days market, 10 days market, 12 days market, days in market, I'm talking here. So you miss the boat, and then you start again because you're not the only one buying. So that's very real. So that's one. Now the second opportunity cost is securing the property late. So what you could have secured today, you took longer to secure, and the growth rate of the market was say 20% or even 10% for simple mathematics. So on a 500K property, that's we are really talking about a $50,000 increase. So month on month is around $4,000 to $5,000, which would have added to your equity of the property. So if you want to highlight or explain a bit on that as well.
Yeah, so significant amount of people are actually are in the right markets as well. At the same time, because these markets are red hot, putting offers on them are actually really difficult right now when there are so many buyers in the market. So it basically means that they're waiting for the property, they do their own research, and then they're putting offers that they think is right. But again, with so many buyers and it is being a seller's market, it's really hard to secure properties. And that's really where the opportunity cost comes in. So yes, you're in action to buy something, but you're not able to secure the property, and that can cause a lot of frustration for a lot of people, that it's going back into that research mode and finding properties again and again in the areas they've selected. And that also the fact that they may have zeroed down on maybe two or three or four areas, but the fact that how quickly can you turn that into multiple areas and go into different states at the same time, look at properties, so you can actually try to have a bigger net rather than just working in few areas or suburbs that they have shortlisted. How quickly can you turn that around? And that agility comes with the right professionals, I believe. But I think people are spending way too much time in one single market to be able to secure something when they have the opportunity to go and parallelly look at other markets and then buy properties for themselves.
True. And there's a lot of conversation about timing the market right? And people spend time waiting for the low interest rates to go to the interest rates to go at a certain number based on their individual circumstances. Their borrowing capacity might not be coming through, or they are waiting for the other end of market where some people believe when it's high interest rates, so the property assets have less competition and the lower price point is there, so it becomes a buyer's market, so we'll enter then. So there are different ways to look at the outcome. So which type of opportunity cost is compromised in that sort of mindset?
Yeah, sure. I think that is true for a lot of people who had even engaged us, because the interest rates, high interest rates for a significant amount of time now is quite real. And it does impact a lot of people in their negative cash flow positions to hold properties and to see this through. So it's not, it's it's quite real problem on ground, because when people are doing this on their own, all they can see is that I can buy a property and I can look at the numbers, and I'm looking at a position where, let's say it's a metro area in Melbourne. I'm buying something for $800,000 and the rent is say $600, and that's $24,000 negative for the year. That's significant amount, right? So the options there is you can look at different markets where you don't have to spend $800,000 high yields. There are other strategies that you can actually look at as options. Maybe that based on your risk appetite, people can look at commercial as an option where you can actually turn your asset into positively gained upfront, pretty much on the day you settle. So commercial properties, even with 7% interest rate, are still positively geared right now with the type of properties we've been securing on high net yields. Or you've got options with rooming houses, so that's renting room by room, essentially a residential property where instead of giving it to one single family or person, you're actually renting by door, so it's rented out room by room, essentially, which brings in more rent. Or you could look at options with Airbnb, right? What people are typically doing is they're buying either apartments or they're buying townhouses, essentially just to sort of get better yields, or they're buying into extremely remote areas or rural areas where there might be single industry or mining towns, for example, where the risk is very high, or going into states that are very small in population and overall growth, which can give you high yields for short term, but it is non-sustainable. So people don't can't see that in the long run. But this is where diversification of not only area states but also applying the right strategy at the right time is equally important to balance your cash flows alongside without losing growth, right? So a lot of people are waiting for interest rates to come down, to your question, right? So that they can still continue to buy that same $800,000 property, as I mentioned as an example in Melbourne, where the rent is still going to be 600, but because interest rates will be lower, they can now hold the property. But what they've missed out is that whilst they're looking at $800,000 now, that property, by the time interest rates will come down and it is going to be possible for them to hold the property, that property might already be around 950 or even $1 million for that matter, right? And that's just an example, but it is quite real that we have seen a lot of people putting things on hold. Rather than actually doing that, you can, as I said, change the strategy, which can actually help you get the cash flow that people need. And again, this is not about putting people under financial stress or actually getting people to do things that they're not comfortable. It's just that people who are able to do that, people know that they are in the right position to do that. It's for them to really talk to the right consultant or a professional and seek help if they need one. But all I'm saying is there are other options available for you to achieve better results than actually buying the wrong type of asset or waiting for long enough for things to happen, because market is market. Interest rates will always go up or down, but in every single market there are ways how you can still make the most of it.
Absolutely. And the analogy I always give, and it comes to my mind right now, is like people lose sight of the woods while looking at the trees. And it's so true, because the overall big picture is not really in front of them, and they are looking at the point in time issues or problems, but they're not putting it together from the overall portfolio thinking perspective or the end goal they are trying to achieve. And it's so important you talk to the professionals, your accountants, brokers, to specifically look at what are the fine tunings you can do in the portfolio at the point in time, so that you can keep on optimizing it. It is almost like you have utility providers, so it's a good idea to sort of review your utility providers and their rates and everything every year or second year, just like you do with your brokers. The same way, the portfolio also needs a little bit of overall strategic review to make the right choices. So on that point, there is another opportunity cost, which is really about not, so people focus a lot on entering the markets but not exiting the markets as well, to my point. Because you might have entered into a great asset which would have served you till a point, or maybe you have an asset uh, which you think is serving to your point, but it's actually holding you back from moving forward from a borrowing capacity perspective and all, and maybe from your choices which you want to make perspective. So if you want to elaborate a bit on that, Anubhav.
Yeah, I mean that's a big one as well. Again, and there are a lot of people who are quite emotional with the assets that they have, and as a result, holding on to asset without actually doing, an opportunity cost analysis on it to really see if I continue holding this property, is it really serving my purpose, right? We've had a chat with a recent client who has a property close by in the west of Melbourne, and the only reason they're still holding the property is because it doesn't give them any maintenance issues and it's pretty good, right? But little they also know the fact that it is not growing at the rate that their other investments are growing, which have been purchased through us, but they're only holding it because it doesn't have much of maintenance cost. Look, I mean that's a wrong reason to actually even hold the property, right? They realize that, they understand that, but you need someone who can say, okay, if you sell this property, how can you repurpose those funds for better returns, right? And that's really where, if you're not in that position to really look at your current assets and look at the positions your properties can actually achieve in the next 2 to 3 or 4 years, and versus actually selling those properties now, if you could use those funds to repurpose that elsewhere, what does that mean to them, right? Another example, a client example, is we've recently had someone who bought a property with us about a year and a half ago, or maybe 2 years now. And they had their own home in east of Melbourne, and they bought an investment property with us in Queensland. The investment has done phenomenally well, but due to change in circumstances, their family circumstances changed back in India, so they had to move back for a short period of time, about maybe another 2 or 3 years. Now, in this time frame, what will happen to the investments here? They might not want to come back to Melbourne. And pretty much, then what do you do with the house they have in Melbourne and the property they bought in Queensland? So you need someone who can then analyze this and say what is the right thing to do in this situation. So we were able to look at that and say, okay, well, because there's so much uncertainty, you don't know when you're coming back, if you're coming back at all, but you're quite certain that you don't want to come back to Melbourne, then it doesn't make sense holding the investment or your own house which is in Melbourne. In fact, rather than actually trying to hold that property with your savings from jobs you're doing in India, that doesn't make sense. You're actually spending money in dollars but earning in rupees. That doesn't make sense. So they're on with the idea that we should sell their property here in Melbourne and utilize those funds and reinvest those funds into a commercial asset, for example, here in Melbourne, or maybe in anywhere in Australia. And because it's going to earn positively get income, it's going to not only help hold the Queensland property on the merit of the positive get property that they're going to get, but at the same time, it'll help them look at the portfolio building as a reinvesting as well, even if they have to come back to Melbourne down the line, right? So
Yeah,
3 years is a long time, and there's a lot that can happen in these 3 years. But taking the right action right now can give them the right insights of how they can repurpose funds and try to get into a positive territory rather than actually getting funds from India to hold the investments here.
that's true. Thank you. And as I'm talking to you, I'm just looking at, there are so many scenarios which are really opportunity costs, and people sometimes don't realize it, right? Even home buying for people, if you're a first home buyer, the question is always, should we continue to rent because we are okay, but we don't have enough money right now? Should we wait until we save enough money, or should we go now? And and it's the most difficult question to answer, because your own home is your emotion, your nurturing of yourself or the family you want to bring up, and it's a very individual choice. There is a sense of peace and belonging when you have your own home. Um, so I guess there are two angles to that as well. I mean, sometimes if you are trying to arrive it mathematically, of course you need to look at what sort of home you are trying to buy as a first home buyer or even a second home buyer versus the choices you have. Even things like children's education. People want to move from suburbs where they are already settled to suburbs where there are better schools, and sometimes they think, oh, it's only important to go and buy a house there, but they might be doubling the amount of loan they are taking, although they can still rent and still meet the requirements of their family to really be in the zone where the school is. So those sort of things are also opportunity cost. which impact humans in their ability to do much more than what they realize they can do, whilst not compromising the needs of their family, right?
Yeah, and I can give you a clear example. Today we had a client who signed up with us,
Yeah.
referred by another client to us, and they've been in Australia for 8 years. And 6 out of those 8 years, they've been trying to find a property for themselves, or they've been thinking that we should buy our first home before we invest. And they've spent significant amount of time on that thought process, traditional thought process of buying their home first before investment, where they did not realize that 6 years have passed by, right? And that's a serious opportunity cost right there. And what they have seen is their friends and family who were able to buy properties and build portfolio, now they are under extreme pressure. And this conversation actually was held just recently, while they signed up today. And I could feel in their tone that they really want to now make up for the lost time, right? Because in their 50s or late 40s, it's really difficult for someone to reverse the time and actually say, how do I wind the clock back to when I was in my 30s, and be able to build that portfolio that I should have built 10 years ago, as an example, right?
Yeah.
So that comes with a lot of pressure on people, and also causes procrastination when you don't have the right people who can help and support and really guide you, as such. So such examples are absolutely real, and there are so many people sitting in hindsight for things to happen for themselves, whether it's waiting for the right time to happen, whether they are limited by what they know, the conventional thinking of buying investments, or being emotional about what they do, right? But it's instead, if they actually reach out to the right professionals, be it accountants, financial planners, right, brokers, just take action by talking to someone. There's so much more free information nowadays. It's available on social media that we know of. Not that everything is great. Lots of fake stuff is also available, but you really need the right team on your team who is got your vested interest to make things work. Now, I'm not saying this is not a selling pitch at all, but I'm just saying that I've, we've learned it from our clients that they are learning these things the hard way. Either it's time that they have lost, or they have lost money and time both in making things work for them before they realize that they need someone who can guide them the right way and get started.
So true. And even if I flip it the other way, where you stretch yourself a little bit to buy your own home, uh, and there's nothing wrong in it really, because you have taken time to decide whether you want to buy or not buy. You are a couple looking to grow your family, you need a space, you have visiting parents, whatever the reason is. We all have gone through that. That also is something important to understand, that by not doing that, sometimes you are not growing the uh, property asset which you are owning as your family home. We all have bought this property. Like, I live in Point Cook, west of Melbourne. When I bought it, I felt like I'm stretching a little bit more than I actually thought. But it was the property which my family liked straight away after seeing many properties, and we just said, all right, for now it's a bit of stretch, we'll take it. But now the property in 10 years time has given us equity which has allowed us to do many things. So
Yep.
sometimes it's good to talk to people. Of course, people talk to friends and family, but a professional broker, accountant, real estate person, buying agents, they can give a good perspective on these things. So true.
Yep.
So last uh, comparison of opportunity cost is also about the choice of assets in which we invest. Um, of course, we are biased. We are on I Love Property platform, but I honestly believe that diversification is important. So within property as well, diversification is important, to go to different states, different type of assets, different type of strategies within the assets. But also then when you go into different asset class altogether, like shares or crypto or whatever, there's nothing wrong in it really. But a good assessment with your financial planner or an accountant or a broker or even the people you trust goes go, goes a long way. Otherwise, I mean, right now in self-managed super funds, unfortunately, because of the global event, a lot of growth has been wiped off, and people can't do anything because it's just the time they have to wait. It will bounce back at some point. But just keeping it into one sort of asset is also an opportunity loss when things are going pear shaped. What's your view on that?
Yeah, diversification is absolutely the key to success in long term. And it is a must actually for every astute investor who's looking at building their portfolio the right way. And I'm not just saying it's the property alone, but it is the most, what brings you the most comfort in doing what it is. There are people that I know who only work in equities, or they buy gold or hard assets like that, but they wouldn't want to even touch the property, and that's okay. It's not about property, it's about investing the money where they can see growth. A lot of people were in crypto. When crypto goes well, everyone's really happy. When it starts to go down, no one talks about it, right? It's how the nature of the asset class is. So I don't think there's any right or wrong. It's all about saying inaction is not going to get them where they need to be. They really need to take some action, but to make an educated guess and really make the things work for them and turn the wheels in the right direction. If you have that professional support, no matter who it is, as I said, there are plenty of professionals available, but you really need to reach out to the right people so that you can get your game going the right way. As you said, I mean, if there are people sitting on the not doing anything because they want to buy their home first, or they're in the analysis paralysis, like, is this the right property? Am I just thinking too much about it? Are the numbers looking good? Is this going to even increase in value? A lot of people think that markets are already at its peak, how more can it go up there? I'm not going to do anything, and they're waiting for the right moment, right timing to happen, like another crash that will happen hopefully. Like, a lot of people may anticipate that this US tariff war that's happening right now, maybe the market is going to crash in property. In my opinion, there's nothing called crash in property in Australia. As long as migration continues to happen and supply always outstrips demand. I saw first home buyers struggle 21 years ago when I came in Australia. They still struggle today. There are still incentives on the government that have been happening from last 10, 15 years that we see. But whatever incentives government come up with, this properties will always keep rushing. If someone's giving you right now, I think both parties are looking for the election going forward, and both parties have something for the first home buyers to get in there again. But point is that the market already prices those discounts, whatever you are actually seeing, and markets will run its way, right? Because the infrastructure is slow to build, right? There has to be money for them to build the infrastructure, and by the time they build the infrastructure out for in any area or suburb, we've got new migration that takes place. So there's always a catch up to do, and as a result, you're always waiting for the right time for things to happen, and there is no right time, right? If someone said don't invest in COVID, I don't know what's going to happen, or they talked about in GFC what's going to happen, people will never take action, right? Every time there is weakness in property market that I've seen in Australia, there's governments who will step in to make sure that this sector doesn't go backwards, right? Whether it's actually incentivizing people to buy or coming up with some sort of options, or even now with US tariffs that we're talking about, already most analysts are talking about interest rates going down, right? So now people are waiting for right time for interest rates to go down. Markets are already hot right now with interest
Yeah,
rates going down. What is that
yeah,
going to do in low supply, high demand areas? It's only
yeah,
going to go worse, right? So I think that anytime is good time, as long as you just look at everything pragmatically and don't do over analysis of something, and really have the right professional by your side to guide you in the right way.
yeah. And I must call out that sometimes because the profession or generally professionals from property markets, they are perceived to be always suggesting about invest, 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 buy, and it creates a sense of FOMO or peer pressure. But there is no there is no intention to present ourselves, at least from what I do, what I've been working with professionals. But unless the right context is discussed, the actual distress can't be avoided, which might be coming a person's way later on. So it's quite important to work with the professionals. The worst thing is, as you said, is to be comfortable not knowing that I'm not doing anything, so nothing can happen to me. That itself is a common thing which I've seen with a lot of my friends and families over the year. So you rather talk to someone rather than uh, assuming that everything is fine. Secondly, if there is a financial distress, that also is very important, that you talk to professionals. Maybe a broker can listen to you and see what can be done from a remodeling of the loan perspective. Maybe there is a solution which you haven't thought about. Maybe a real estate agent can help you to sell the property, or maybe get a better rental property if you are struggling to do something with the cost of living. So it doesn't needs to be yourself dealing with a lot of these things. uh, and that, in my mind as a professional, I try to keep that, so that if your health is lost, your relationships are lost, your anxiety levels are not good, uh, that itself is a very big opportunity. There is nothing which will match it. But there are professionals to support you. You should come forward and talk to them. I mean, this platform is all about properties, but as an overall scheme, that's quite important to keep in perspective.
Yeah, I guess the human, the health is really important. And health is not only just physical, but also the mindset, and your mental health is also really important. So to keep that in shape, you can't do everything, but life happens to everyone. So I think we we want to make sure that people understand that there's always help available for every possible reason. But again, it's all about reaching out no matter what it is, right? So in the context of the property, when I started my portfolio building, there were no buyer agents then. So there was a lot of that self-learning required, a lot of things that you had to do on your own. And of course that comes with cost, cost of making mistakes and so forth. But now people have options, which is really good. So when professionals are there, I think it's about choosing the right professional who can work with you, who you can resonate with. And I think that's going to make the difference in your outcome overall, right? Like I discussed with a client who had to go to India now, but the investments are here, and they are trying to hold the investment here with the incomes they're earning in India, right? That could be quite stressful, although they're on good jobs, which is okay for now. But as things will change, it's going to get very difficult for them to hold anything over here in Australia on Indian income, for example, right? So what do you
Correct.
do with that, right? So it's about trying to create opportunities and options here in Australia that can hold their investments in Australia, whilst they don't have to put so much pressure on the savings back in India, right?
Yep.
So an early call out is important rather than actually waiting for things to happen and it's too late.
Yeah, and also, as you said, come forward, talk. And also, sometimes a person in distress may not be having the courage or confidence to talk. So, keeping that alertness around for your friends and family, or people you have access to, is also good. So you can always take them out for a coffee and talk. So I guess we always talk, and it's just very quick. The time goes past. It's already 3 past 7. So I hope everyone who has followed us today or watches this video later on finds a lot of value in it. Please keep following us, keep sharing our platform with friends and family. Um, it's time to sign out, Anubhav, right? Time
Yes,
to hit
thank you so
play.
much for bringing me on again. And look, I mean, um, you can only go far so much alone. But if you really want to go further in your life, you need the right professionals. That's my message. And you need the right help. And it doesn't always have to be financial or a transaction. It's just a matter of just giving a shout to someone who's happy to listen to you, and can come up with ways how you can come out of your situation, because what you're planning to do, someone's already done it before, right? Many times. So please reach out if we can help in any form or shape. We are more than willing to help you and give you the support that you need. It
Even
doesn't
on
have to
this
be a
platform,
service. Even
even
on
on
this
this
platform,
platform, post the questions with your name, without name, doesn't matter. There are a lot of people to happily answer.
exactly. I Love Property is all about that. It's about the community, and the community is yours. You'll get the right answers. I'm quite active, so if you post a question, I will guide you the right way. And so is Puru doing the same thing. We are all here to help. So thank you very much for listening, and have a great night.
Good night, everyone.